SoFi seems to finally be picking up some steam, and there are many indicators finally pointing in the right direction. But are these actual indicators of anything at all, and should you pay attention to them? And where does Luke think SoFi is going next? Well, I'll answer all those questions for you today right after you hit that like button, guys. Please hit that like button if you like getting the truth without the hype, because that's exactly what you're going to get today in regards to this stock. So there's going to be some good things and some not so great things. So let's kind of put it all together here so then we can kind of look at SoFi and see exactly where it's going next. Now, kind of for context here, SoFi has been on a great run over the past 3 weeks or so. I mean, we got a chance to buy SoFi in the fives just 3 weeks ago during that kind of freak out time. Now, that was just a few weeks ago, and you're up almost 50% on those buys. Now, you only got a few hours at those prices, and our mastermind members saw those buys in real time, along with buys of Palantir in the $20 range. Guys, there was buy alerts going off all over the place that morning whenever the market had that freak out there. And that's the way it works. You just get a very small window of time to actually buy great stocks on a great discount like that. That right there is one of the big benefits with the group. And I also released my full bull and bear case for SoFi stock specifically, complete with 2-year price targets based upon valuation. Not hype, not hope, not crazy projections, based upon actual valuation. So I may have left something special that expires this weekend for you guys at the pinned comment down there. Those of you looking to join my group and be a part of that mastermind membership, see everything you get there. We'll talk about more of that at the end because we got to get into more in regards to SoFi. So I'll tell you exactly where I think SoFi is going here in just a second, but let's look at some of those indicators and some other points that people like to throw out there and see if there's actually any value in looking at that or not. So first up is the Kramer endorsement. Oh yes, unfortunately, once again, we got the Kramer endorsement for SoFi, which typically is the death knell for a lot of stocks. Now, it's not always that. Sometimes he's absolutely right. And that's kind of what happens when you make 1,000 different predictions over the course of a year. It's kind of a common deal. Then you can just point to your wins, completely ignore your losses, and people think you know a whole heck of a lot about the stock market. That's just kind of the way it works, whether we like it or not. You know, YouTubers do the same exact thing. We're all guilty of it there. That is how it works. So does this matter? Kramer endorsing your stock or not in regards to the actual stock in regards to SoFi specifically? The answer to that is no. I'm sorry. He has no clue as to whether or not they're going to beat on EPS, whether or not they're going to raise. He knows nothing about it, and he has no impact on any of that sort of things. I'm sorry, people aren't not going to use SoFi products or Galileo or anything else because Kramer says he likes the stock. It's just not how the stock market works at all. So this has absolutely zero to do with the stock itself and what's going on with SoFi right now. I'm sorry. I don't like the fact he did it because it seems like every time he endorses something, it goes down. But I also know it really makes no material difference whatsoever. It means nothing. Nobody cares outside of his audience. I can assure you hedge funds are not looking around and going, ooh, Kramer endorsed that, let's tank it. Or vice versa. Ooh, Kramer endorses it. Now we're going to buy it. We think it's a buy. Just not how it works at all. That's simply for an audience, and it's strictly for his audience that watches his show. That's it. That's the only people it actually matters to. And unfortunately, most of those folks have absolutely zero influence over the stock market. Number 2, short interest in SoFi. Now I'm going to attack this from a little bit of a different angle here, and I want you guys to kind of understand that. And I know it's going to make some of you guys upset. But hey, that's exactly what you're here for. So that's exactly what you're going to get. Now, the last time we had a squeeze situation per se, the stock did have a great run, got up almost to 10 bucks or so. And guess what happened? It was just a month or two later, it was cut right back in half almost back down. That's why when I think about short interest or anything else like that, does it matter to the stock long term? The answer to that is absolutely not. It does not. There was a time in every stock's journey, take your NVIDIA, 100,000% gain since the beginning there. There were plenty of times back in the day where it had massive short interest. There's been plenty of times just during this current run where it has had massive short interest. And guess what? Yeah, when it was 2x, it had massive short interest. And guess what it did? Oh, it just went on to continue to multiply from there. Now you're sitting on a 10x, way back from those 2022 lows in regards to the stock itself. So clearly, it does not matter a bit. Now, if you are trading SoFi, that's a completely different story, and I understand that. But for a long-term buy and hold investor, somebody who is caring about what happens to SoFi 2 years from now, 5 years from now, 10 years from now, and I hope it turns into the behemoth I think it can turn into in regards to those 10 years, I'm not looking at the short interest at all. I don't remember Buffett making a decision on, ooh, should I buy that? Ooh, the short interest is kind of high. Let me lay off right now because the short interest is kind of high on that stock. don't think it's something he really cares about all that much, and it's not something I care about either. I don't own SoFi for the possibility of a short squeeze. That's what traders do. And if you want to trade based upon that, okay, it may look that way. I don't know. I don't view it from that perspective. So I don't freaking care about the short interest. No, I have never gone in my 25 years of doing this. I've never gone and looked up the short interest on a stock and then made a decision based upon that. I don't care. I don't care how much of the float is eaten up by shorts. Don't care. Doesn't matter to me. It's completely irrelevant. What I care about is valuation. That's it. And everything else, hey, happens to get a short squeeze, great. It also means it's probably going to run further than it should, and it's going to come back down as well. And a lot of people are going to FOMO in. That is why folks end up buying high and selling low. So another thing that gets talked about a lot that doesn't freaking matter in the end to a long-term buy and hold investor. Trader's completely different. So if somebody's out there discussing it and they're talking about it from a trading perspective, understand. Long-term buy and hold shouldn't even enter your calculus in regards to the stock. Number 3, rate cuts coming. Now, we've demonstrated here on this channel before where rate hikes benefit a bank, and specifically we've talked about SoFi before and others, because it increases the margin that you can charge versus what you're actually having to pay out in regards to interest. Obviously, when interest rates are down at 0, that's the reason why your savings rate is, 0.0001% or whatever the heck the ridiculous low rates the banks are doing, because they're just trying to squeeze as much margin as possible. Whenever rates go up, it gives you some breathing room. Now, there's a lot of people out there like, oh my gosh, now that rates are going to start getting cut, it's going to hurt SoFi. The exact opposite is true, because these guys sell loans, and all the loans that they've made with these higher interest rates, as interest rates go down, become more valuable, and you can sell them off. And instead of having to wait 5 years to realize all the gains on that loan, you can take a little bit of a less gain and realize all of it right now, meaning we're going to see more profits to the bottom line as rates go down if SoFi chooses to increase selling their loan book, which is a very, very common move that different banks do in a variety of different ways. So this one actually does matter, and is something that you need to understand the mechanics of what's going on and kind of how it affects the bottom line. Now, what we don't know, and what everybody speculates about, and you guys know I don't like to speculate, is how aggressive are they going to sell those? They may choose to not sell them right off the bat. They may choose to dump a whole lot of them right off the bat. We don't know how they're going to choose to play this over the long run. So that remains to be seen, and I can't accurately project what it is. But what I do know is it gives them the flexibility to absolutely boost their EPS to whatever the heck they want to, and obviously improve margins and everything else in regards to how the business works. So this absolutely matters, and it absolutely is an indicator that actually tells you something that's going to tangibly hit the bottom line for SoFi stock, or give management the opportunity to pull that lever at any point in time. Again, it's another thing that gives us a cushion if something else doesn't go as well. This is another lever that they can turn in order to create more profits for themselves at the end of the day. Number 4, institutions are buying more SoFi. We continue to see institutional ownership increase. That is good news for us as shareholders. And the reason why is quite simple, because as a stock kind of goes over here from the traders into more of these institutional investors, they don't trade in and out of stocks like traders do, where they're trading in and out of positions all day long and all other crap like that, whatever. They're not doing that game. So as you see institutional ownership go up, with the exception of Tesla, you tend to see volatility come down in the stock. You tend to see more normal moves, more moves that make sense, not hype runs and then big crashes and hype runs and crashes and all kinds of other stuff like that that really kind of seem more random than anything else. Yeah, that's because the trader controlled, and we don't know what the traders are thinking. Now, yes, this absolutely matters to SoFi, and it also shows a belief in SoFi as a company as institutional ownership increases. Now, we need to see it increase a lot more, but we're trending in the right direction there. So we're not there yet. We're not to a point where we're not going to see wild swings in the stock yet, but we're seeing that trend in the right direction. Now, I'm going to caution you with one thing, and this is a mistake that we make as retail all the time, and that is we start thinking about, oh, institutional owners going up, and we start trying to add, that should add X amount of dollars to the market cap. No, it doesn't actually. It doesn't add anything to the market cap, because it's not providing anything in regards to EPS or anything else of that nature. It doesn't give you a higher valuation. It doesn't give you anything tangible like that. So yes, it is a positive, but it's a positive from the aspect of it providing some stability to the stock and some institutional ownership who aren't going to just freak out because, I don't know, some random news dropped about something, and now all of a sudden we just need to sell because, I don't know, reasons, whatever. You get less of that and you get more stability. However, it does not add to the valuation. It does not make the market cap magically worth a lot more. It doesn't add a $500 billion to the market cap or anything ridiculous out there that sometimes gets pushed. It does none of that. So just make sure you're not making that mistake whenever you're thinking about that point specifically. All right, so where do I see SoFi going next? Now, to be very, very clear, we are seeing movement in the right direction in terms of fintech. Basically, we're not out of the doghouse yet, but you can definitely see the door is open and the light is coming in regards to fintech across the board. You're seeing this in a lot of stocks, not just SoFi. You're seeing it even in PayPal. We're even seeing it there. So the door has finally opened up. And yes, I still have it as a buy. It's on my watch list. I'm going to add more shares, especially if Wall Street gets a little bit silly. We get a little bit of a dip. I'm going to add on the dip still. And I could, if that door continues to stay open and we start to creep towards it, see the stock start to march back to that $10 mark or so. I mean, that is absolutely where the momentum is going right now at the stage. And remember, it is still mostly trader controlled, and traders do a lot of trading based upon momentum. Same thing with the price target, same thing with everything else. A lot of that is all based upon the momentum of the stock and where it's going in that particular time and where all the technicals line up and all that other stuff like that traders love to talk about. So yeah, I could absolutely see it moving in that direction towards that $10 mark towards the end of the year. However, I am not banking on any of that. We have all kinds of we have the Fed actually executing rate hikes. How much are they, rate cuts? How much are they going to cut those rates? How much is the election going to be? I mean, it's going to be chaotic enough here in the US, but how chaotic is it going to be? There's still a lot of unknowns there that could provide traders reasons to beat down stocks. And unfortunately, I can't say with full confidence that SoFi is in a spot where it won't have an effect on that and on that march up. So although I see that march up to, close to that $10 range or so being the most likely, I also think we're still going to stay kind of range bound here for the rest of the year until we get through a lot of the rest of the year and a lot of the stuff that's kind of going on for the rest of the year. Now, of course, SoFi could always change that with blowout earnings and then incredible, they always beat and raise, but maybe giving us a really big beat, or maybe not necessarily a huge beat, but a massive raise in guidance. That could absolutely be something too that absolutely continues to push the stock forward. But what I'm seeing, and what the good news is, and the takeaway I want from you guys, is you're seeing that door finally open for fintech in general. And that is bullish for SoFi overall. And if you want to see the exact price that I have SoFi at in regards to in 2 years, exactly where I think it'll be at based upon valuation, not hype, not hope, not any of that other stuff, based upon the numbers that the company has given us. And you want to be able to talk to me directly, see all my buy and sell alerts in real time. You want to be able to get for your free coaching, take your 5 free courses, be a part of the best 6, 7, and 8-figure Discord out there, and be able to talk to me anytime you want, slide into my DMs. Make sure you take advantage of the Labor Day sale that is going on right now. Check out the pinned comment down there. See if a membership's right for you. See everything you get. There's more than I'm mentioning right here in regards to the membership. Nobody offers more for less. So check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.